Let us look at rent income adjustments. I will start with important definitions. Now, what is rent income? Rent income, it is the amount earned by letting a piece of property. It is recognized as other operating income since it is not the income earning activity. So if I'm ShopRite and I'm renting out part of my property, the main reason why I'm in business is to sell goods. But if I rent out property and I get income from that, if we call it passive income or just an accidental income that you did not plan, but in this case, you're making money from that. That's why we include it under other operating income. Now, rent income can be accrued. That is when the tenant has stayed for the full year but has not paid for the whole year. Rent income will be the amount receivable for the whole year. This amount will include the amount that has not yet been received. If you watched the previous two videos, you will have realized I spoke about income received and income accrued. So it follows from that. The rent income not yet paid must be recognized as an asset in trade and other receivable. Please highlight that. It must be recognized as an asset in trade and other payables. And then we've got deferred income, okay, which is income received in advance. When a tenant has already paid for the part of the following year's rent, only rent and that is the rent that falls within the current financial year will be recognized as income. The portion of rent received in advance must be subtracted from the amount reflected in the trial balance since it is not earned. Okay, we'll talk more about this as we do this example one here. Let us look at this example and continuation from the previous videos. Please note that an amount that you are given in a pre-adjustment trial balance is simply it represents an amount of rent that has been received. Okay, so in this case, we've got rent income, which is 20,550. That 20,550 represents rents that we have received for the entire year. Under adjustment, they just said to you rent was received for 13 months. Rent increased by 10% on the 30th of April 2022. I will need you to highlight the following in your handout. I hope by now you have downloaded the handout. Now highlight this, okay, because that's very important, and also highlight that. More than anything, please highlight this as well, where they told you that rent was received for 13 months. Now that is a problem. Why is it a problem? Because it tells us that in that 20,550, there's rent that is in there, and that rent was not supposed to be there. We call it deferred income. When you look back at the definition that I gave you earlier on, where I said deferred income refers to rent income or any other income that you have received, but it's not for the current financial year. You have not yet earned it. All right, you have not yet provided property. You will only provide property the following year, and that's when it will be earned. For the current year, it has been received, but it has not yet been earned, and that's what we call a deferred income, aka which can be called income received in advance. Okay, from November. So that's when our financial year will start. That's why I asked you to highlight the end of financial year. So our financial year will start on the 1st of November 20, that will be 2021, December 2021, Jan, and local all the way to October. That is 12 months. But in April, please know that rent was increased by 10%. It was increased by 10%. So it went up by 10%. And always, rent is always at 100%. So when it goes up by 10%, it ends up being at 110%. Okay, we'll explain that shortly. Now, it means that we received the rent, it increased from the 30th of April. I should have put it there in May actually, because in April it means that it had not yet increased. It started increasing in May. And obviously, from May onwards, our rent will now be at 110%, and it will include November, which falls outside our current financial year. Okay. Now, please note that how much was rent before it increased. Okay, we don't know how much it was. Okay, so this is what I'm going to do. So for November, our rent will be X. For December, our rent will be X. For Jan, our rent will be X. For Feb, it will be X, because we don't know how much it was. It was X. For March, it was X for the entire month of April. But immediately it got to May, it was no longer at X. It was now at X times 110%. Okay. Even here in June, it was at X times 110%. In July, it was X times 110%. In August, it was X plus 100 times 110%. In September, it was X times 110%. In October, it was X times 110%. And in November, it was X times 110%. It was no longer at 100%. It has now increased. That's why it is now at 110%. Now, it was X for how many months? Let's count the rates. It's 1, 2, 3, 4, 5, 6. So it was X for 6 months. And it was X times 110% for how many months? We have May, which is May, June, July, August, September, October, and November. Now that will be 7 months. So it was X times 110% for 7 months. When we add our total rent, it is supposed to give us 20,550. Now, you should have done this in maths. You know that when you're multiplying something like this, obviously, I will leave 6x as it is. I will leave 6x as it is. But when it comes to this bracket, I'm simply going to multiply 7 with 110%. And you're going to write it as such into your calculator. 7 times 110%, how much will that give you? 7 times 110%, how much will that give you? Now let's check quickly. 7 times 110, and you're gonna press shift, and then you press percentage. Let's see how much it gives you. I will change it to a decimal. So it gives me 7,7. So if I take 7 times it by 110%, I will get 7,7. But there's X there, so you don't leave the variable up behind. You will end up having 6x plus 7,7x. You equate that to 20,550. Now you're going to add the coefficients. Remember, when you add like terms, because these are like terms, you will just have to add the coefficients. You will simply say 6 plus 7,7, 6 plus 7,7, and then you keep the variable. So whenever you see like terms and you're trying to add them or subtract them, you keep the variable and you just add the coefficients. In this case, 6 plus 7,7 will give us 13,7. You equate that to 20,550. To solve for x, you will simply divide both sides by 13,7, and that'll give you 1,500. Let's confirm that. It is 20,550. You divide that by 13,7. You press the equal sign, and it will give you 1,500. Note that that x, it's before the increase. And the month that we're looking for, which is the month of November, it is after the increase. Okay, it is after the increase. And we don't want the month, the November month, because it doesn't fall for the into the current financial year, but it has been paid for. Now let's check. I simply will increase that 1,500 by 10%. So it will be 1,500 times 110%. Please note that for me to get that 110%, I simply took 100% and I added it with 10% because it has actually gone up, okay? 100% added with 10%. So I will simply see what I get there. So all I did was just take 1,500, you multiply it by 100% times 100% plus 10%. So it's 100% plus 10%. Note that if they said it's a decrease, it'll be 100% minus 10%. In this case, they said it's an increase by 10%. That's why it's 100% times actually 100% plus that 10. Now, that's how we got to that 110%, 1,500 times 110%. It'll give me my monthly rent after the increase. So my monthly rent after the increase will simply be 1,650. Now, just to break it down for you as to what it was, basically this is what it was. From November, it was 1,500 up until May, okay, up until May, the end of April, that is. From May onwards, it was 1,650. But now this 1,650 goes into November. The reason why it's changing now in color for November is because November does not fall within the current financial year. We have received that 1,650 and it is included in the 20,550. But it does not belong into the current financial year. Now we need to minus it from our total rental income received. To record this, I did the table method. Now for the table method, you just look at the number of months before the change. The number of months before the change in this example will simply be 6, and the number of months after the change times the percentage increased. The number of months after the change times the percentage increased. So in this case, the number of months after the change that we received the money for was 7 months, but it was no longer at 100% now, it was now at 110%. So you will simply take that 7 and multiply it by 110%, it will give you 13,7. Then you're going to take the rent income that you have in your trial balance, put it as a numerator, and divide it by the total in that table. What is the total in that table that I gave you? It is 13,7. And how did I get that 13,7? This is how I got 13,7. I took the 6, I added the 7, and I multiplied the 7 by 100. Okay. 7 multiplied by 110 Okay, one at a time, 110%, and then you press the equal sign, it'll give you that 13,7. You change it to a decimal, it'll give you that 13,7. That is the total that I'm talking about. Is this total that is given to you here. That's how I got that 13,7. I simply put that into a calculator and I got 13,7. Now we're trying to calculate rent per month before the increase or the decrease. In this case, it's before the increase. You will take the amount that you have in the trial balance, which was 20,550, and divide it by the 13,7. It'll give you your rent per month, and your rent per month will be 1,500. To increase it, you're going to take 1,500, multiply it by 110%, and that will give you 1,650. Note that for the current year, must our rent go up or down? It must go down because we actually received 1 month extra that doesn't fall in the current financial year. So when rent decreases, it decreases on the debit side. Okay, when rent decreases, it decreases on the debit side. So we are going to debit rent income and credit income received in advance. We are going to debit rent income. And the reason why we're debiting rent income is because income is decreasing. Income decreases on the debit side. So we need to reduce it. We need to reduce that 20,550 by 1,650. And then we create a liability, and that liability, we call it deferred income or income received in advance. And that will be 1,650. Note that income received in advance is a liability because we owe tenant one of these two things. It's either we give them their money back or we simply give them property to stay for that extra month that they pay for, which is November of next year. And the reason why we're minusing the November of next year is because we haven't yet provided the property for November, which is next year, because our financial year end is the 31st of October. So anything that falls outside, we need to minus it, okay? That's why in this case, our rent income will decrease on the debit side. Remember, when it goes up on the credit side. So when it goes down on the debit side, and it will decrease by that 1,650, which is just rent received for 13 months. In the general ledger, we got rent income. Note that rent income is income, and income goes up on the credit side. So it is basically minus plus. So in this account, we'll have minus plus, okay? So it'll be minus and plus. That is because income increases on the credit side. I'm going to start with the balance that is given to me in the trial balance, and the balance that is given to me in the trial balance will be balance brought down. It was 20,550. At 20,550, I need to bring it down because it was received, but not all of it was earned. We only earned 12 months of that, meaning that we need to reduce it by the extra amount that was received in advance, which is 1,650. The actual rent income that we have incurred will be that 20,550 minus 1,650. And then we're going to take 20,550 minus that 1,650. It'll give us a balancing figure, which we're going to take straight to profit or loss account in the general journal. This will be recorded in the general journal, and the amount will simply be 18,900. In total, we're going to get 20,515. Your deferred income will simply be that 1,650, and we're going to carry it down because deferred income is a liability, and everything that falls under the statement of financial position section will have a balance. That's why we're going to bring it down to the following month, which will be November. Remember, we're working right here, guys. We're working with October, so this was transferred on the 30th, on the 31st of bring it down to the 1st of November. And when we bring it down to the 1st of November, we'll have balance brought down. It will be 1,650. So when we start the new month, you're going to have 1,650, of which later on will have to be reversed when we incur it. We're going to incur it in the following web, and we won't have any liability because we'll have allowed the client or the tenant to stay for November. That is next year, not this year. This year we will have that liability. Now, recording this in the financial statements, rent income, we're going to take it rent income that is given to you in the trial balance and minus that 1,650 that falls outside the financial year, and this will give you 18,900. Please note that your operating income will just be 18,900. And let me just do it quickly. It will be 18,900. That is because it is the only value we have as rent. And then obviously the liability part will be recorded in trade and other payables. The liability part will be recorded in trade and other payables. So the rent that we still owe that we received in advance is a liability, and it will be recorded in trade and other payables. And that will give us 1,650. Okay. Please do this as an activity and check out the next video.